Dad, what's the deal with Bitcoin? My friend says he made a fortune. He keeps talking about how it's the future of money and how everyone should get in on it now.
Teenagers and their get-rich-quick schemes. Jimmy, there's a lot more to investing than just jumping on the latest trend. Investing is like a giant game, and there are tons of different players and teams. It's not just about Bitcoin or any single investment. Think of asset classes like different types of sports teams. You have stocks, bonds, real estate, and even cryptocurrencies like Bitcoin. You got your all-stars, your steady players, and those risky rookies hoping for a breakout season. Each type of investment has its own strengths and weaknesses. It's all about figuring out which teams match your game plan. You need to understand your goals and how much risk you're willing to take. Now, you can't just jump into the game without knowing the rules, right? You need to do your homework and understand the basics before you start investing.
Jimmy, bless his heart, looked a bit overwhelmed, but I could tell his curiosity was piqued. He was eager to learn more and understand how it all worked.
Don't worry, I'll break it down for you. We'll take it step by step, and soon, you'll be able to make informed decisions about your investments. We'll start with the basics. First, let's talk about what investing really means, and why it's important for your future. First up, we've got the classic trio: stocks, bonds, and cash. These three are the cornerstone of most investment portfolios, each playing a unique role in balancing risk and reward. They're like the foundation of any good investment strategy. Just like a house needs a solid foundation to stand strong, your investments need a mix of these assets to weather financial storms. Stocks are like owning a piece of a company. When you buy a stock, you're essentially buying a small slice of that company, giving you a share in its profits and losses. Let's say you buy stock in your favorite video game company. You believe in their potential to create the next big hit. If they release a killer game and their profits soar, your stock value goes up. It's like hitting the jackpot because the company's success directly boosts your investment. But if the game flops, well, your stock value might take a hit. The risk is higher, but so is the potential reward.
Michael explained, making sure to keep it simple and relatable. He wanted to ensure that even those new to investing could grasp these fundamental concepts.
Bonds are more like loans you give to the government or companies. When you buy a bond, you're lending your money to these entities in exchange for regular interest payments. They offer fixed interest payments. Think of it like getting paid rent for letting someone borrow your money. It's a steady stream of income, much like a reliable tenant paying rent on time. It's generally less risky than stocks but might not grow as fast. Bonds provide stability and predictability, making them a safer bet for conservative investors. And then there's cash. It's the most stable but might not grow much over time. Cash is like your safety net, always there when you need it. Think of it as your bench players. They're always there when you need them, but they might not be the ones scoring the winning points. Cash provides liquidity and security, ensuring you have funds available for emergencies or opportunities. Now let's talk about real assets. These are investments that you can physically see and touch, unlike stocks or bonds, which are just numbers on a screen. These tangible assets include things like real estate, commodities, and precious metals. They have intrinsic value because they are physical items. Real estate, for example, involves land and property. It's one of the most common types of tangible investments. Remember that apartment building we invested in a few years back? That's a real asset. It's something you can visit, touch, and see the value in. It can generate rental income and potentially appreciate in value over time. This means it can provide both immediate cash flow and long-term growth.
Jake nodded, recalling the family investment. He understood how their apartment building had been a steady source of income.
Commodities are another type of tangible asset. These are raw materials like gold, oil, and even coffee beans. They are essential for various industries. Their prices fluctuate based on supply and demand. This can make them a bit more volatile, but also potentially very profitable. Remember when the price of coffee went through the roof last year? That was due to a supply shortage, making coffee beans more valuable. These assets can be a good addition to your portfolio, offering diversification and a hedge against inflation. This means they can help your investments keep up with rising prices, providing stability in uncertain times. Now, on to the stuff you're really curious about, the digital Wild West of cryptocurrency and DeFi, I said, a mischievous glint in my eye. Cryptocurrencies like Bitcoin and Ethereum are digital currencies, kind of like virtual gold. They use something called blockchain technology. which is a secure way to track transactions. DeFi, or decentralized finance, aims to revolutionize traditional financial systems using blockchain. Think of it like lending, borrowing, and trading, but without banks. Now, I cautioned, holding up a finger, these digital assets are exciting, but they're also incredibly volatile. They can skyrocket in value one day and plummet the next. It's like riding a roller coaster, thrilling but risky. Jimmy, I said, my tone turning serious, investing isn't just about making money, it's about building a secure future for yourself. Think of it like this: the earlier you start, the more time your money has to grow. It's like planting a tree. The sooner you plant it, the bigger and stronger it will become. Remember that game you've been saving up for? Investing can help you reach your goals faster. And who knows, maybe one day you'll even be able to buy that fancy car you've been eyeing. The most important thing is to take that first step, Jimmy, I encouraged him. Don't be afraid to start small and learn as you go. There are tons of resources available online and even apps designed specifically for young investors. Start by researching. Maybe even consider investing a small amount in a company you believe in. And remember, Jimmy, investing isn't about getting rich quick. It's a marathon, not a sprint. So learn from your mistakes, stay informed, and never stop growing your knowledge.